Welcome back to The Next Millionaire, the channel where we break down the minds behind the world's greatest fortunes. Everyone knows the name Warren Buffett, but behind one of the greatest investment records in history stood another mind, quieter, sharper in many ways, and just as essential. Charlie Munger served as vice chairman of Berkshire Hathaway from 1978 until his death, partnering with Warren Buffett to steer the company from a struggling textile operation into a diversified conglomerate with a market capitalization exceeding $800 billion. Today, on The Next Millionaire, we examine the philosophy of the man Buffett called his architect. Munger met Buffett in 1959, and the two maintained close contact thereafter. At the time, Munger wasn't even an investor by trade. He had pursued law at Harvard University, building a successful legal career in California during the 1950s, while quietly managing an investment partnership on the side, applying value investing strategies he'd studied from Benjamin Graham and David Dodd. The partnership with Buffett would prove to be one of the most consequential friendships in financial history. By 1978, Munger had become vice chairman of Berkshire Hathaway, where his influence proved pivotal in shifting the company's investment strategy toward acquiring high-quality businesses at reasonable prices rather than distressed assets at a discount. This is, perhaps, Munger's single greatest contribution to investing philosophy. Buffett credited Munger with encouraging him to buy wonderful businesses at fair prices, rather than buying troubled businesses simply because they were cheap. It was a fundamental shift. Where early Buffett searched for bargains, companies trading below their liquidation value, Munger pushed for something more durable. Businesses with real quality, strong brands, and lasting competitive advantages, even if it meant paying a fairer price for them. This evolution led Buffett to invest in companies like Coca-Cola, American Express, and See's Candies, businesses with strong brands and durable competitive advantages capable of compounding capital for decades. Munger's mind worked differently from most investors. He was widely known for his concept of mental models and the psychological aspects of investing, believing that understanding fundamental principles from disciplines like economics, history, and psychology allowed for more rational decision-making. This multidisciplinary approach became his signature. Rather than relying on a single framework, Munger argued that the best thinkers borrow tools from many fields: psychology to understand human behavior and bias, history to recognize patterns, and basic arithmetic to avoid self-deception. He famously assembled a checklist of 25 tendencies that lead to what he called psychology-based dysfunction, predictable traps that cause even professionals to make bad decisions. Munger's value wasn't only in finding opportunities. It was in his composure during chaos. He embraced volatility as an investor's ally, providing invaluable counsel during periods of crisis and uncertainty, and his level-headed analysis proved pivotal in helping Berkshire deploy capital decisively into investments like Goldman Sachs and Bank of America during the 2008 financial meltdown. His own words capture the philosophy precisely. A climate of fear, he often reminded shareholders, is your friend. It is a strikingly counterintuitive idea that the moments markets feel most dangerous are often the moments true value becomes visible. The numbers behind the Munger-Buffett partnership remain almost unmatched in financial history. Together, working side by side, Berkshire's book value per share achieved an average annual compound growth rate of over 20%, with the stock price rising from $19 to more than $84,000 per share. But Munger never sought the spotlight for it. Buffett described Munger as his closest partner and right-hand man, crediting him with being the architect of modern Berkshire Hathaway's business philosophy, while Munger himself consistently let Buffett take the bows and receive the accolades. Charlie Munger died on November 28, 2023, at the age of 99, just 34 days shy of what would have been his 100th birthday. But his principles didn't retire with him. wonderful businesses over cheap ones, mental models over single frameworks, composure in crisis, patience as a discipline, not an accident. What Charlie Munger ultimately proves is that great investing isn't just about finding value, it's about thinking clearly, borrowing wisdom from every field available, and having the courage to act when others panic. Thanks for watching this episode of The Next Millionaire. If these principles resonated with you, subscribe, because every great fortune starts with understanding the minds that built it.